So like I was explaining earlier, this bullish marabou is telling us that there is higher percentage or the presence of buyers in the market is very, very high, right? And there's high
Yes.
tendency that the market might push up, right? And I
Yes.
said earlier that the bullish engulfing, this is trying to tell us that there are presence of sellers in the market, but the presence of the buyers are much more higher than the presence of the sellers in the market, right?
Yes.
I spoke about bullish armor, which says that this candle was once dominated by the sellers. It was once pushed down here by the sellers. But the buyers came in with full force and said, no, this can't be. And they pushed the price back upward. And that's why you can see this wick here, right?
Yes.
For instance, now if you are walking through a place and it's very, very rainy, if your parent or someone who is trying to like look for you could not don't know where you go, they can trace you by the footstep of yours. If they don't if they know the kind of slippers you wear and they know the footprint on that, they can trace you by your walk step to where you went to, right?
Yes.
That's to tell them that, oh, Emmanuel once passed through this place, right? So that's same thing as week. Week is telling us that there was once a time that the sellers were selling downward there, but after a while, the buyers now came back again and put the price upward. Did you get it?
Yes.
That's that's what this candle is telling us. So once you see such candlestick in the forex market, it's telling us that there is higher tendency that the chart or the price might keep doing what? Might keep going higher,
Mm.
right? So
Yes.
this is Twizzler bottom. Twizzler bottom, just like I said, I don't want to go too far. I know we have not spoken about the opening and the close of the market. In our next session, we're going to be speaking about the opening and the close of candlestick. All right. We'll just have this brief understanding of candlestick. And before that, we're still going to go to the charts to I will show the practical aspect of all these candlestick, how they form and what happens after they form. All right.
Yes, sir.
So now these 2 weeks at the bottom is telling us that there was once a time that this candlestick was bearish. There was once a time that this candlestick was bearish, but the buyers did what? They pushed it up. They pushed it up. Are you getting me? That means that they kept
Yes.
pushing the price up at this particular range here. The buyers. That means that there is higher tendency that the buyers might keep pushing the price up if they can push the price upward here and here, right?
Yes.
Good. Inverted hammer, it says the same thing, but inverted hammer is not really a good confirmation for a buy. Are you getting me? This candlestick is telling us that there was once a time that this candle was once bullish. Are you getting me? That was once
Yes.
bullish. So after a while, before it closed, the sellers pushed the price downward. And that's why you can see this wick here. Do you see it?
Yes.
So it's trying to tell us that this candle was once bullish like this or like this. But after a while, before it closed, the sellers pushed the price downward.
Downward.
Good, good. Now this is a morning doji star, right? If you see this kind of candlestick formation in the forex chart, it is called the morning doji star. And like I said earlier, it's not really compulsory you know the names. What is compulsory is that you can understand what they are interpreting to you, right?
Yes.
You know, I told you
Yes.
that candlestick is what? Is language of the market.
Market.
Yes, it's just telling you that okay, do this at this particular time, don't do this, wait. Do you get me? Just like a language. So if you can understand the language, then you'll be able to take or make the right decisions and work with your risk management. So now this is morning doji star. The first candle that will be forming is a bearish candle. Then the next candle will be formed. This is called doji. All right.
Yes.
You know, there's no color here, just weak, right?
Yes.
This is tell you that the buyers and the seller went in a battle and there was no winner. Do you get it?
Yes.
The buyers and the sellers went into a battle and there was no winner. So they came back again to rematch the second day or the following week. Or I'm using an example for you. For instance, now, if you and I went to the boxing match and there was no winner at the first boxing match, we draw, and we came back again I actually won. If we come back again, who is likely to win again?
You.
Good. Because in the previous match, I won. So here, there was no winner, there was no loser. It was a draw. But the next candlestick that formed here came out as a bullish candle that says that buyer's presence is now probably dominating the market and it will keep dominating the market. So seeing this kind of candlestick confirmation is giving you a higher probability to go for a buy. Do you get it?
Yes.
Good. Now, this is bullish pin bar. The price action behind bullish pin bar is the same price action behind the bullish hammer. Are you getting me? It's just that
Yes.
the wick is much more longer than the bullish hammer. So there was once a time that this candle was once like this or like this. But the buyers came with full force and pushed the price upward before it closes. All right.
Yes.
Now, this next one is called bullish inside bar. Bullish inside bar.
Right.
That means that there were presence of sellers, which was very, very higher than the presence of the buyers, right?
Yes.
That means that the buyers are still inside or under the seller's presence. But this is not really a good candlestick confirmation to take a trade for a buy. You have to wait for another bullish candle to take a buy. All right.
Yes.
So, like I said, don't pay attention to the name. Pay attention to what the candlestick is forming, what it's trying to tell you. All right.
Yes.
And the last one for this bullish candle is what we call the dragonfly doji. Same psychology behind the bullish pin bar and the bullish hammer is the same psychology behind dragonfly doji. Are you getting me?
Yes.
This candlestick is telling us that there was once a time that this candle was once red or bearish like this. But the buyers stood up and said, no, we are willing to push this price upward and keep buying. That's why this price moved from here and moved up here and closes here. Do you get it?
Yes.
Are you sure you understand it?
Yes.
Do you have any question?
I have question.
Okay.
That bullish pin bar.
Yes.
Can you explain again?
This bullish pin bar. There was once a
Yes.
time that the price opened here. Okay.
Yes.
But the sellers pushed the price downward here. Okay. There was
Yes.
once a time that this candle was once like this. When it began to form. But before the candlestick closes, before another one opens, the buyers push the price back upward again. You get it?
Yes.
That's it. Do you understand now?
Yes.
Any more question?
You know.
Okay. So this 1, 2, 3, 4, 5, 6, 7, 8, 9. These are candlestick confirmation for a bullish market or for a bullish decision if you want to take a buy on a particular zone. Do you get it?
Yes.
So now we'll now move to this other section. 1, 2, 3, 4, 5, 6, 7, 8, 9. All right.
Yes.
So from here downward here, it's the opposite of this. Are you getting me?
Yes.
Just like we have candlestick confirmation for a buy, we also have candlestick confirmation for a what? For a sell. Now, look at this bearish Marabuzo. Can you see that?
Yes.
This bearish Marabuzo is also the opposite of bullish Marabuzo. Do you get it?
Yes.
So, now can you tell me what I said about the bullish Marabuzo?
You said about that the bullish Mazuzo, the buyer are more they are more pleasant than the seller.
Exactly.